an interview call with a fund accounting firm, then be confident while answering this question as to what is the difference between mutual fund and hedge funds. Let's understand this. You got a job call at you got an interview call at a fund accounting firm, and the interview profile clearly states that you need to have knowledge of fund accounting, but you don't know what are the different types of funds. So this video is going to help you understand what are the different types of funds out there. Let's understand the difference between a mutual fund and a hedge fund at the very beginning. While both of them are pooled funds in the sense that they collect capital from different investors, pool it together, and then make an investment decision on this collective pool of funds, they differ in terms of investor profile. While mutual funds are largely for retail investors, hedge funds are for accredited investors only. Mutual funds take in small sums of money while investing, including as little as 5,000 rupees in India. Accredited investors have to invest at least 500,000 USD into the hedge funds that they're investing in. Mutual funds are meant for reducing market risk. Remember the slogan that comes up, investments are subject to market risk. Please read the offer document before investing. Well, that's what market risk is. Hedge funds are not. Of course, hedge funds are also exposed to market risk, but hedge funds, by their very nature of trading and investment strategies, are meant for risk-savvy investors. Therefore, mutual funds and hedge funds deploy different resources for different investors. And this is something that you ought to know, because many people often say that mutual funds are regulated but hedge funds are not regulated. That's not entirely true. Of course, mutual funds are regulated to a very high degree, and hedge funds are not subject to that level of scrutiny simply because they are expected to be risk taking. They're expected to have some bit of speculative activity, some bit of leverage activity, some bit of hedging activity. So because their investors expect that high kind of returns from them. So mutual funds and hedge funds are not subject to the same degree of regulatory oversight as each other, and mutual funds are subject to a greater level of scrutiny, a greater level of regulatory oversight compared to hedge funds. Do hedge funds need regulatory approval? Of course they do. They need regulatory approval before investing in two different markets, especially at a country level. They also need regulatory approval for taxation purposes, and therefore mutual funds and hedge funds are subject to regulatory authorizations, regulatory approval, but at different degrees.